Hey folks, Dan Frio here with the Mortgage Update. Today is August 21st, 2020. TGIF for everybody out there. I got a bad hair day going. It's over this side. I hate looking in this camera because it keeps flipping everything upside down and backwards and everything, so forth. So the reason why you're here, you want to find out what happened today with rates. And let's look at some economic news, and it's Friday, so I'm going to do this now and get the heck out of here. This was a long week, and I appreciate you guys all helping. We got about 500 subscribers so far in the last 2 weeks. I need 500 more by the end of the month, so only you guys can help me with that. So please, if you like the video, give me a thumbs up. Don't forget to subscribe down below. Click the bell so every time I post a video, you get an alert. But let's get on to what happened today. So right now we see, that's the headline news. But let's get to that in a minute. So why do people come here? Well, they come to figure out what's going on with mortgage rates. Realtors, financial planners, home buyers, mortgage people, they follow the channel, and I greatly appreciate you guys following it. But today was basically a complete stagnant day. I will take it. The reason being is we're hitting some levels that I'm hoping that we stabilize right here. I'm just hoping we don't see a push down. Theoretically, technicals, we should probably be in this range right now. Believe it or not, I don't mean to be the bearer of bad news, but that's kind of where we should be at in a normal market right now. Let me recast that. In a normal market, we probably should be down in this range, if not worse. Why are we at these historic low rates? Because of Corona. The Fed stepped in, and they're doing everything and anything they can to make sure the housing market, which is the catalyst of all the markets, doesn't crash. People will lose homes, house values will plummet, the banking system will be just complete chaos. They've learned it from the 2008 to 2010 debacle, and hopefully they know what they're doing now. They're doing a fantastic job with it. Long term, that's a little bit of a concern, but hopefully when my kids take over this business, it's their concern at that time. But for us in the business now, those looking for mortgages now in the next 2-3 years, I think we're going to be good. But you never know what tomorrow is going to bring. So why do we watch this chart and this number? Great question. This is what we call a mortgage-backed security. This is the price. What a mortgage-backed security is a bond, and it's a whole cluster of bonds that are, or mortgages that are sold as a bond as an investment. Okay, quick, lesson on bonds. The more you pay for a bond, the lower the rate of return you get on that bond. So meaning the lower the interest rate, the lower the mortgage rate. Okay, that's it in a nutshell. So in this case, we love green. We love when the number goes up because that means people are paying more for the bond and the prices the rates are coming down. Green is good. Red is bad. Red means the prices are going down, which ultimately means rates are going up. So green is good. We love green. We've been pretty stable through here. Look at these runs, nice runs, but we should pretty much stay stagnant right here because there's really no economic news that could come out to really shock the market. A lot of the things that we follow are the GDP, employment, unemployment, inflation rates, the cash freight index, and a whole bunch of other things. In a normal market, that's what we follow. Unfortunately, again, we're not in a normal market. So what we focus on is what's the Fed doing? Well, great news is the Fed continues to buy up mortgage-backed securities, stabilizing the market. So they kind of overdid it in some of these areas, which is fantastic. Keep buying and buying and buying, and like a lot of other things, kick the can down the road, but it's greatly benefiting people today. So that's what's going on with the trends of the mortgage-backed securities. There's a bunch of lines here that I go over every day, and I'll just do it real quick for the newbies. This line right here is a short-term ceiling. This line right here is a long-term ceiling. This is a short-term floor. This is a long-term floor. These lines are called Fibonacci levels. So in the long run, rates are going to bounce around like this. and should pretty much stay in this territory in normal markets. It'll break out every once in a while here and there, but normally it should stay in a range. Short term, we should kind of be in this range, okay? And that's where we are. We're staying right in this range right here. Because of the middle, my short-term recommendation was we were going to have a pullback to this area here, which we did. And then this is the floor. This could be our next pullback area. So basically in this area here, we've locked everybody. All right, so that's what's going on right now, and this is why I follow this market as well as a lot of other things. Some news that came out today, I'm going to read this for you. Existing home sales killed it, just blew out expectations. They were up 25%, the biggest increase ever in history. So existing home sales. What that basically means is, there's huge demand. Let's say supply is stagnant or maybe a little bit low because of the COVID pandemic that's pushing up home prices. The average home price, I got it down here, the median home price increased 8.5% year over year, is now trending at $304,100. So we have huge amounts of people buying homes. We have great appreciation. Again, the average median home price has gone up 8.5% year over year. First-time home buyers are equating to 34% of all home sales. That is fantastic. I think a lot of people are getting out of college, getting some jobs. Is this the perfect time to get out of college and get a job? No, because of the pandemic. But I think a lot of people, rents are so high that it's, you can get into a house with basically your security deposit that you would need for rental, and then you'd have a lower house payment than you do on rents. So that's crazy, and that's what's pushing a lot of people into home ownership. Again, the good news is the Fed keeps pumping in. They're in the tune of $4 to $6 billion. I said that with a B. $4 to $6 billion a day is what the Fed is pumping in to this market to keep it stable. Okay, so that's fantastic news on that front. What else? There was a cost that came out the other day that I published, and what happened was the people that control basically the mortgage rates, the ultimate piece of something. And I won't get into detail of this because I don't want to go too deep into it and can go basically confuse everybody. They came out the other day and they added a half a point charge to all mortgage rates for refinances. Most or a lot of lenders right now are actually charging people back that fee, or they've really jacked up their rates. I had 3 interviews for loan officers today. Every one of them said either 1, their rates went way high, or 2, they have to charge their borrowers. I received 6 loan estimates today so far, and we've beat every one of them. I'll just grab one here and tell you what we did, and this is just out of a whim. People were getting 2.99%. I came back offering 2.5% down. Their total costs were their lender fees were $2,116. Mine was 0. Next one is customers getting a 2.75 rate with, I think this one was nuts. Yes, $3,711 in fees. So 2.75 with almost $4,000 in fees. I came back at 2.625 with 0 lender fees. So in that case, I saved them a 0.125 on rate and almost $4,000 in fees. The other one, I was almost 0.5% lower in rate, and I saved them $2,100 in fees. So you blend it out, I gave them about 0.25% better in rates and was $2,500 cheaper. That's where we are, and that's why I do this channel every Tuesday. I do post rate reviews to go over with you rates all over the internet versus my rates, and I hope you watch that. So tune in on a Tuesday that I posted, and hopefully you'll be happily surprised. One concern coming out right now, and then I'm going to leave it for today, is forbearances, which I tell you guys, please don't do unless you have to do it. is they're starting to stabilize. But unfortunately, I knew this was coming. Delinquencies are starting to surge. Let me explain to you how most of these forbearances are working. So you call your lender and you're thinking, okay, this is awesome. I get to skip, or I get to basically skip 3, maybe 6 mortgage payments. That's fantastic. Well, so here's what happens in most cases, not all cases, but most. They'll say, okay, you don't have to make your August, September, October mortgage payments. You don't have to make them right now. So August, September, and October. Come November, we need you to make August, September, October, and November's payment. Can you see why mortgage rates or mortgage delinquencies are spiking? And they're only going to get worse? Because if people aren't watching channels like mine, they don't know. They're like, okay, heck, if I could miss 3 mortgage payments, I'd love to miss them. Throw it on the back end of my mortgage. I'd rather pay those 3 payments 30 years from now than today. Just the cost of money today or the cost of income today, push it off 30 years from now. I'd love to do that. Sign me up. But it's going to haunt you. So if you like the video, I'm going to leave it at that. It's Friday. I know you guys are busy. I want to get out of here. It's been a long, long week. If you would like to reach out to me or get a hold of me personally, here's the best way to do it. Go to therateupdate.com. You can scroll down and here's the number. You can call this and reach me personally at 844-775-LOAN. That's 844-775-5626. My name is Dan Frio. I do the rate update every day. What I ask people to do is email me. My email is D for Dan, Frio, which is Frio, at preferredrate.com. You can also go to therateupdate.com, hit the get pre-qualified here to buy, refinance here, or if you want to just completely get started and put your application in right now, hit the apply now button and apply. What I asked people to do, and when I just went over this with you, and I said, I think it was 6 or 7 people send me in their loan estimates. Here's what happens is when you're looking for a mortgage, you call a company and I have to issue you a loan estimate or a fee worksheet. One of those 2 things you should get. And what I ask people to do is say, if you're in the process right now, send that to me. Let me review it. And that's what I was just saying to you. I had 7 of them today. I think there were 7. We were able to, on average, beat the rates that people are getting by 0.25 and save them $2,500 in closing costs. If you're interested and you're looking for a mortgage right now or in the process, email me your loan estimate. I'll get back with you. And what I do is I can't really show you because you might show somebody's information. Is I'll write everything that I can do in red pen. I'll scan it in color and send it back to you. And so you'll have what the other company's offering you. Right next to it is what I can offer you, and then you choose what you'd like to do. So that's the best way to do that. Or you can just go to the website and take care of everything there. If you're looking to buy a house, we'd love to help you. We got a lot of realtor partners we can set you up with as well. Other than that, please, like I asked before, don't forget to give me a thumbs up. Subscribe down below. I'm trying to hit 10,000 subscribers by the end of the month. Only you guys can help me. So that's it for today. God bless you. Have a great weekend. Be safe. Be happy. Stay cool. It's supposed to be 95 here in Chicago. And I hope to see you next week. Bye-bye.